Hello everyone, this is a weekly COT review. In this video, we're going to talk about the latest update of Commitment of Traders report. You can find this information on the website in the section Market Info COT Charts. So COT stands for Commitment of Traders. It's a report that is published on a weekly basis by CFTC. It's known for more than 45 years. It's widely used and followed by many market participants. It's sort of a long-term sentiment indicator, and it shows the positioning of large speculative traders. So the report is very useful. However, it has a few disadvantages. First of all, it's published on a weekly basis. And second of all is that it's published on Friday, but it represents a breakdown of positions from Tuesday. So there's a 3-day delay that you should be aware of. So here on the website, you will find a table with the latest update from September 21st. So in the first column, you see all the instruments that we cover. The second column shows net positioning. That's basically the difference between long and short positions. Then you see the weekly change from the previous week. You see the long and short ratio. It shows how bullish or bearish is the current net positioning. And finally, the last column shows you COT index. So the idea is actually taken from the popular book, Commitment of Traders Bible, written by Stephen Breeze. So the idea is very simple. We actually compare the current net positioning with minimum and maximum positioning over the last 5 years. So it kind of turns net positioning into a scale from 0 to 100%. So let's talk about the latest update. So first of all, we can see the instruments which are on the top are the most bullish, and instruments which are at the bottom are the most bearish. And here we actually don't have a lot of changes. Gold is still very bullish according to the net positioning. So it's traditionally it has really large number of long positions. However, the weekly change is pretty significant. It lost 24,000 positions. The long and short ratio is pretty high, but this is okay. This is normal for gold in general. And I think COT index just confirms that actually the current net positioning is actually more bearish than bullish because it shows that it stands at 30%. So usually we have much higher net positioning on gold. So then the second thing that I usually pay attention to, which instruments have the largest change. So here we talked about the gold. The second instrument is actually the Canadian dollar. So as you can see, the net positioning is negative. The long and short ratio, we have more short positions for about 56% more. Yes. And finally, the COT index is 0. So basically it shows it's actually bearish, but this signal can be also include some more detailed analysis, detailed information. So the best thing would be just to look at the charts. So we have 3 additional charts that we offer on this page. The first one shows the net positioning along with the price of the instrument. The second chart shows you long and short positions separately. And finally, you can see the COT index. So let's switch to the Canadian dollar and have a look. So first of all, we see that net positioning is turning more negative. Here we see a sharp decrease in long positions, while short positions grew slowly. And the COT index became bearish for the first time since July 2020. So actually, this is, in general, I would say in combination shows more bearishness of the Canadian dollar, because we see a sharp decrease in long positions. We see that COT index became 0, not yet extreme, but quite low. And in general, the chart is actually very inverse here, and we see that we probably have further upside, further potential for the dollar to gain against the Canadian dollar. Let's review the second instrument. I would pick the EUR/dollar because we can see also the weekly change is pretty significant. So I should also mention that my analysis can be very biased, and it depends also on my view from my positions and from any other analysis that I do. So you should be also aware of this fact that probably your vision, your analysis of these charts can be very different. So first of all, I see that net positioning is getting closer to zero. So here we notice that short positions are gradually increasing while long positions remain pretty elevated. So in case if we will see some liquidation of long positions, it actually can create further pressure on EUR/dollar. So the COT index says that the current positioning is very bearish, but not yet that extreme. We actually have been here for some time. So usually extreme values are, for example, right here, when we see very negative, like not negative, but like the COT index is at zero and it stays at zero for a very, very long time. So we do not have this situation because we had a few upticks in the COT index. We had a few upticks in the price. So in my opinion, there is no any extremity in this indicator. So in my opinion, it looks bearish, and probably it has further potential to stay at low levels. So all three charts, in my opinion, look very bearish. In my opinion, your vision and probably the analysis from other our analysts can be very different. Also, maybe one of the things that we can do is we can switch to a 5-year period and look for a similar situation. For example, here in 2018, we had pretty similar positioning when we had the positioning became negative, and then we can see that short positions increased, long positions were pretty high for some time, and then market participants started to decrease long positions very sharply, and then we had this further continuation of the downtrend. So this is what actually can happen. I see some similarities between what happened before in 2018 and 2019 and what's happening right now. But that's my vision, that's my opinion. So let's continue the analysis. I'm going to pick up one more currency pair. So let's pick up the next biggest change. It actually occurred on silver. So we can actually look what is happening. I'm going to switch to 3 years because here we see the charts much better. So here we see that net positioning is decreasing. The price is falling sharply. Here we see a sharp increase in short positions. Long positions are also increasing, but very marginally. And the COT index became also bearish. In my opinion, charts look bearish because we see the short positions are increasing, long positions can actually fall. Also, once again, we can see some liquidation of long positions. And given the trend, given what we see on the short positions, in my opinion, there is some weakness behind silver, and those charts are actually indicating that the current sentiment is pretty bearish on silver. So basically, that's it. That's how you can use those charts, interpret, take your time to play around with those charts. Depending on the instruments that you trade, I think you can actually get a lot of useful understanding and get a feeling of the market and how the traders are positioned, and you can actually draw some interesting conclusions from those charts. So that's it for this video. I hope you enjoyed it. Please leave your comments. Please support this channel. We finally have around 90 subscribers, and actually our first target is to get 100 subscribers. So please subscribe to the channel if you're not yet subscribed, and please like this video so that more people find this video, and so that we can actually provide more analysis, more videos in the future. Thank you very much for watching, and have a nice day.